Holy smokes, everyone. What a crazy and wild week it has been in the markets. There is so much things happening simultaneously right now, and I'm starting to see some big shifts in the market, in the economy. And in today's episode, I want to be going over specifically what's going on with China, what's going on with their economy. I'm going to go over how we're now starting to see the results or the fruits of how that it is affecting the US economy. Of course, we're going to discuss what's happening at the Federal Reserve. We're going to discuss what's happened with Zillow absolutely collapsing. There is so much to cover. This is going to be a very important and action-packed episode. So let's not waste any time, people. Let's get straight into it. Okay, so first things first, what we've been discussing extensively on the channel, we've been discussing what's happening with China. Because again, how I stress, China is so important in the global economy. Their economy has been contributing massively to global GDP, but now they're going down, and it just seems like it gets worse week by week. Because look at this, everybody. China is permanently damaging its marketplace. Because what have we seen? Talk of war, stagflation, and rationing is eroding the country's confidence and affecting the dynamic of its financial industry, which is something we've been talking about, how people are losing faith of investing in China when they pretty much have a dictator where he has been overtaking industries right, left, front, and center, from tech to private tutoring to gaming. He's overtaken the housing market and he's causing a huge crash with developers. And we've also got more news. It just seems like every day there's another developer going down. But let's have a look at the latest on what's happening now. Well, of course, China's economy is showing signs of stagflation, which is really not just China, it's the whole world. There are signs of stagflation in China as prices continue to rise while the latest manufacturing data shows production is slowing. In contrast, the output price index has risen to its highest levels since it was published in 2016. These signs confirm that China's economy is likely already going through stagflation. And for those of you that don't know, stagflation is when the economy is simultaneously experiencing stagnant activity and accelerating inflation. For those of you that remember, the phenomenon was first recognized in the 1970s when an oil shock prompted an extended period of higher prices but sharply falling GDP growth. The factory output was held back by reduced power supply. I've been discussing the energy crisis and telling people how this is going to have huge consequences on the economy. It's just really simple things like that that most people don't take into consideration with their macroeconomic viewpoint. Material shortages and higher input costs, according to respondents of the manufacturing PMI survey. Capital economists said in a note on Monday, China is currently facing a severe power crisis as it grapples with a coal shortage. So this is all resulting in firms having to draw down further on their inventories and longer delivery times. More notably, these shortages and rising prices of raw materials are feeding through to higher output prices. Okay, so we know things in China are getting bad. It looks like there's going to be more stagflation. But now this is happening. They're just getting hit from really all angles here. And again, people, this is going to affect us in Australia, in the US, and around the whole world. There is another huge outbreak going on with China right now. They're completely shutting the country down. And this is going to make the supply chain crisis even worse, and this is going to have more of an impact on the US economy, because we just got some new data, which I'll get into in a moment, on how these supply shortages from China are affecting consumption in the West. Because remember, China is the producer, Asia is the producer, and us in the West, we are the consumers. We don't really make things anymore, we just consume. That's how we get growth. Really, the only thing we can produce is fiat currency. So what is this all leading to, everybody? Well, China is now urging stockpiling ahead of winter. This is prompting huge worries online and throughout China. Now, there's been some speculation on what is happening. Some people are saying that comments speculated the request to stock food must be linked to plans for an attack on Taiwan. One of the comments mentioning Taiwan seen early in the day was no longer able to be viewed in the evening. There was also concern that extreme weather could affect vegetable production and transportation. Wholesale vegetable prices had already soared in recent weeks, costing more than meat in some cases, after heavy rains drenched major producing regions in the north and flooded the top growing province of Shandong. And I'll bring up a chart here. We can just see how the food costs are going up. And, you know, this is going to have a big effect on the poor and the middle class. But I'm also going to go on and discuss what's happening with inflation in the US, because things are going from bad to worse. And, you know, it's getting beyond a joke now what the Federal Reserve is doing. So I'm sure you've all seen the announcement that the Federal Reserve is going to start tapering its asset purchases. But what everyone is getting wrong here, they thought that, okay, this is tapering. Well, this is not really tapering. This is just the Federal Reserve taking the foot off the accelerator. What they were doing before is they were going 100 in a 50 zone, and all they've done is drop that down to 90, but they're still going way beyond the speed limit of what they should be going. So what they're doing is they were printing $120 billion per month by buying $80 billion of US treasuries and $40 billion in mortgage-backed securities. And this was causing yields on bonds to go down, forcing people no other choice but to put their money in the stock market, cryptocurrencies, or the housing market in order to get a return higher than inflation. But what people don't get is they're still increasing the money supply faster than the dot-com bubble and faster than 2008. In 2008, the M2 money supply growth rate peaked at around 10%. Well, look what's happening now. The M2 money supply growth rate, when the economy is so-called booming, everything's great, the markets are booming, why are they still increasing the money supply rate at 12% per annum? And this is leading people like Bill Ackman to say the Federal Reserve should completely cut all their mortgage-backed security purchases and US Treasuries altogether and start lifting rates immediately. He said in a tweet, as we have previously disclosed, we have put our money where our mouth is in hedging our exposure to an upward move in rates, as we believe that a rise in interest rates could negatively impact our long-term equity portfolio. Again, people, this is absolutely insane. We are seeing the highest inflation since the 1970s, and again, the official numbers, the CPI, is complete garbage. We all know, and I've got proof and data which I'll show you in a moment, that inflation is at least double digits. And we're seeing this causing huge mass amounts of inequality between those that have assets and those that don't. The top 1% now owns more wealth than the whole 60% of the middle class. We're seeing people like Jeff Bezos and Elon Musk likely to become trillionaires in the next decade. Meanwhile, this is happening, everybody. Largest US homeowner raises rents as housing crunch persists. But look at how much they're raising rents. And this is going to make just the standard of living, just the cost of living, completely unbearable. Because again, yes, we may have deflation in the non-essentials, but again, housing, food, transportation, energy, utilities, all things that you need to survive are going up much higher than the CPI. And according to Bloomberg Invitational Homes Inc., which owns approximately 80,000 homes across the country, increase rents by, guess what, 11% in the third quarter. That's right. How are people going to be able to afford this? And this is going to cause huge social unrest. This is going to make the homeless crisis even worse. And again, you may think, oh, who cares? I can afford it. Well, guess what? When people can't afford to eat, they don't have a place to sleep, they're going to go look for other ways to make money, which may not be very good ways. They also raise rents by 8% on renewables and 18% on new leases. Geographically, much of the new increases were found in the Southwest, where rents increased, guess what, 30% in Las Vegas and 29% in Phoenix. I don't know how many families are going to be able to afford to pay these high rents. But again, you're having Jerome Powell, him, with his $12 million to $20 million net worth, insider trading. They're saying, don't worry, suck it up. This inflation, it's only temporary. Just hang in there. It'll be all right. Well, it's not going to be all right. People can't afford to eat. They're barely going to be able to afford a roof over their head. And really what the Federal Reserve should have done is they shouldn't have just, cut back their mortgage-backed securities and their bond purchases by 10%. Again, they're still printing money like crazy, and that's why the markets are still going up. What they need to do to get things back under control is completely stop all purchases and, like Bill Ackman says, start lifting interest rates, and then we'll see how resilient the stock market and housing market is once they stop that and interest rates go up at least 2%. Because again, if they don't do this, they're just making the problem worse, and they're just making the bubble worse, and when they do eventually lift interest rates, it's going to make the crash even worse as well. And another piece of data, the US jobless claims continue to go down. So they've met their target on inflation. The job market is improving. Sure, there's many people that don't want to take these lower paying jobs or these jobs that are quite demeaning, but there is jobs there. So they've clearly met their targets. So why don't they get the show on the road and the party and let the free markets do its thing once they start lifting interest rates? Well, maybe this is why, because the economy is now starting to make a big turn with all the issues that's happening with China right now. The US posts weakest growth of the pandemic recovery because of these supply chain issues. Again, you may think energy crisis, it's a bit boring. I only want to know about the stock market or the housing market. You may think, this transportation, these supply chains are a bit boring. But again, people, this is very, very important to know how this affects the economy and how this affects companies' earnings. Because look what happened to Apple. Apple sales missed expectations, and the CEO said this was due to the supply chain issues. So GDP only increased at 2% annualized in the third quarter versus a 2.6% estimate, and housing spending rose just by 1.6% as vehicle outlays fell, which is to be expected because used vehicles, the prices have been going up absolutely crazy. So again, that is more inflation. People can't afford these prices, and simple economics, as the prices go up too much for people to afford, well then demand's going to come down and consumption is going to come down. And you know what's funny about this? People are still debating whether the US is in stagflation. Well, if you look at the GDP numbers and you look at the official inflation numbers, and we all know again that it's much higher than that, we are in a stagflation time. And this is near impossible for the Federal Reserve to fix because all these issues have been caused by things that they can't control. And this has led the Federal Reserve to say that the risks are clearly now to longer and more persistent bottlenecks and thus to higher inflation. We now see higher inflation and bottlenecks lasting well into next year. They said this was transitory. They told you to suck it up, but they're still saying it's going to last into next year. So how long is transitory? They won't give us a time frame. Is it 5 years, 10 years? And here's the thing, even if it is transitory, well, the damage is already done because prices aren't going to go back to what they were at the start of the year. They're just going to grow at a slower rate. But what is another big sign that all this growth has just been pretty much a pump and dump? Well, look at this chart here, everybody. This is the personal savings rate, and really it increased when they started to send out all the stimulus checks. And we saw here the savings rate hit a peak of around 33% in April 2020, but now it is absolutely plummeting down to just 7.5%, actually back to where it was in 2019. So how this is going to affect the stock market is all these companies have had great earnings because of all this extra cash people were stashing during the pandemic, but now they've mostly gone out and spent all that money, so they're not going to see this kind of earnings growth in the stock market anymore, especially with no more stimulus checks. But people, this is what we really need to pay attention to. Look at the dollar's purchasing power over the past 20 years. It has just completely plummeted. It's just gone in the toilet. And, your purchasing power's gone from 59.6 in 1999 all the way down to 36.6. So again, what the Federal Reserve is doing, we need a hashtag and the Fed. They're not helping the average Joe. They're not helping the middle class. All they're doing is pumping up the financial industry. And some huge news for the housing market is Zillow shares have absolutely collapsed. They went down around 25% in a day when they announced they're going to stop their home buying business. They got completely wrecked. And what people are really missing with this is, you think it was just Zillow, which was overpaying for homes during the boom, the FOMO. No, I'm sure there was many more flippers that were out there overpaying prices. There were many more investors that took on too much leverage, too much debt, and they may have to, end their businesses as well. This may lead to more flippers and more companies having to sell these homes at a loss. And not just companies, also individuals. There are many families that, FOMO'd in, that thought that, prices were going to keep going up at 20% every year. And so they overpaid massively. Well, if interest rates do go up, well, then they're going to be underwater very quickly because prices for every 1% increase in interest rates could fall anywhere between 10 and 15%. But everyone, with all this huge news, with all these things going on in the markets, in the economy, what does this mean in simple terms? What's happening right now is the Federal Reserve is making it so there's no other option but to put your money in the markets. Otherwise, they're going to devalue your dollars into the ground. But again, the big risk is what happens when they do finally turn, when they do stop printing money, when they do start lifting interest rates. Well, then people will have some other options to park their money besides the stock market, and they may choose to take some profits when the prices are at such crazy levels. We also have to continue to watch what's happening in China, because as we're starting to see now, what's happening in China is now affecting the US economy. So if the two biggest economies in the world go down, we're going to feel it everywhere. And so there is so much risk right now. Even though the stock market is in such euphoria, it's time to just take a step back, calm down. Don't get involved in the euphoria, because again, when you look at the charts, there are so many stages in the markets, and right now we're at euphoria. People are saying, the stock market can never go down, it only goes up. Doesn't matter what price it's in, just keep buying no matter what. But these are all clear indicators of getting close to the peak. But again, nobody can time the exact month when it will eventually crash. Not even Harry Dent or Robert Kiyosaki. So everyone, that was a quick wrap up of what's happened in the markets this week. Some things to think about and consider. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.